Hi guys, in today's video, let's talk about a company which is recently listed and is becoming a key player in cooling, in specialty gases, in industrial applications. Um, which is, I will first reveal the name of the company, which is known as Stallion India Fluorochemicals, which is a kind of the company like SRF and now in fluorine. When we think of cooling, we think about we imagine like ACs, air conditioners, and refrigerators. But at home, the real picture is bigger than it. Cooling is a kind of heart of semiconductor, okay, data centers, EV batteries, and, and even fiber optics and etc. And behind this critical ecosystem, Stallion India is emerging as a strong Indian player in this space. The company just got listed in this January 2025, and from now onwards only, yeah, investors are saying it is a potential. It is a potential. It has a potential to be a game changer in this space. Let's see and deep dive on this company. So, Stallion story started in back in 2002. For 2 decades, it was primarily engaged in like in blending and distributing to the refrigerants companies, specialty gases. Okay, today its product basket includes refrigerant gases like R32, R134A, R410A, and new generation gases like R1234YF, as well as they have specialty gases like such as SF6, helium, argon, and dimethyl ether. These gases may sound technical, but they are vital for everything like air conditioning and fire safety systems to advanced electronics and medical applications. That makes a styling company not just riding a air conditioning growth story, but also a mega trend that is in industrial cooling. Now let's break down in its business model. In first half of FY24, almost 86% of its revenue came from sale of refrigerant gases. 12% came from 12% came from the sale of refrigerant cans, and the remaining 2-3% came from selling accessories like washer pumps and cylinders. Geographically, Maharashtra was the biggest contributor in their revenue. Maharashtra was contributing around 55% of their revenue, followed by Delhi. Followed by Delhi. Delhi contributed around 20% of its revenue, with the rest spread across other regions. But here, something important is that the company's top 10 customers accounted for nearly 89% of its revenue in first half of FY24. Okay, compared to 75% in previous year. So this shows the concentration, but this concentration shows a deep relationship, but it also creates a dependency risk, right? So yeah, coming to its IPO point, Stallion India raised kind of 199 crores in January 2025, and out of which 161 crores was fresh issue and remaining part was OFS. The reason for this issue was they needed a fund for working capital use and for their blending facilities. And let's look at their financial performance in first half of FY26. They grew their revenue by 50%, even though their first and second quarter usually remains softer. Even management told that first and second quarter would be softer quarter, and quarter 3 and quarter 4 and second half of FY would be stronger. So yeah, and they even grew their EBITDA by kind of 12% to 14.3 crores, and PAT grew by kind of 21% to 10.3 crores. So management has clearly stated that to look this company clearly, to understand this company, you need to analyze the quarter on YOY basis, year to year, not on quarter basis, because this company is seasonal. So as I explained earlier that majorly Q1 and Q2 is softer quarter, and Q3 and Q4 is stronger quarter. The real excitement actually lies in this expansion plan. The company has three major projects coming. It's ongoing, basically under execution. It's in. The first is at Bhilwara in Rajasthan, and Stallion is setting up their facility of R32 refrigerant gas plant, and this is a big strategic shift from being an uh, packaging and blending company to actually manufacturing the molecule. Okay, uh, this project will cost around 200 crores, and the first 5,000 metric ton is expected to open from mid 2026, followed by the another 5,000 metric ton capacity. This plant will also enable advanced blends like R410A, R404A, and new low GWP refrigerants. Second facility is coming at Khalapur in Maharashtra. The company is building the facility for semiconductor gases, liquid helium, and with completion target of it is in November 2025. So 2 months are remaining for their completion of this project. And the third is coming at Mambattu, Andhra Pradesh, which is a largest facility for specialty gases and HFOs. Facility is under construction. Okay, it is currently under construction, and the shift is because of their timeline has shifted due to heavy monsoon season and design upgradation. Together, this expansion will be change for Stallion scale, would change their scale and capabilities completely. So let's look at their future perspective. Management is very bullish on their growth. They have guided around 30 to 35% revenue growth every year for the next 3 years. Okay, PAT margin, they have guided for PAT margin around currently it's around 10%, but they have guided for 17 to 18%. Okay, especially with R32 specialty gases, that capacity, the margins would be expected to 17 and 18%, with specialty gases delivering higher even margin profitability. So their internal targets is to cross 2,500 crores by FY 2030. For the contest, in Q1 FY26, their revenue is just 110 crores, but it is ambitious target, but it will be achievable if execution is strong and management walk the talk. I remember in January 2025, the Stallion India got listed, and from that point of time onwards only it started falling like a knife, and it make a bottom of around 64 to 65 in March kind of stuff. And I was first working with one of the YouTuber in this field. He was having an modern portfolio, and I contributed for it. My stocks were I was able to deliver great returns for him. And while that span, I was researching on Stallion India Fluorochemicals, and he got an opportunity to meet with their promoter. And in that meet also, I remember he was very ambitious. He was also telling that we will be big, we will be one of the biggest in this field in refrigerants. But his question was like, we also do refrigerant gases, we also make refrigerant gases and chemicals for refrigerants like SRF and now chlorine. Then why our stock didn't get that kind of valuation? We traded 19p, and these people get a kind of 30 to 40 kind of p. And God eventually listen his wish, and now his stock is also trading at around 30 to 40 p. So management and promoter group is very much ambitious, and I love that kind of people. That kind of people can make a big return. Of course, no story is without any risk. Stallion India is totally dependent on China for its raw material. Uh, Globally, around 85% of fluorochemical molecules are outsourced from China. Even US and Europe suppliers also outsource manufacturing in China. Any disruption here could affect the supply chain. Okay, customer concentration is another risk. 90% of Stallion's revenue is concentrated with top 10 their customers and clients. Okay, so any affect to their one of the largest client can affect Stallion's number, and any effect to their large project capex which is coming in Bhilwara and Bhilwara and Mambattu can face if they face any regulatory issues or logistic issues. And the business itself is cyclical and seasonal, influenced by demand pattern and in refrigerants and regulatory changes in anti-dumping duties or so the big question comes here is, should you consider this stock or a company? Stallion is clearly in a transformation mode. Okay, from being a blending player to becoming a fully integrated manufacturing company. It's already a first move. It already has a first mover advantage in HFOs and in specialty gases, supported by a partnership in with global major like Honeywell. And if company executes well its capex like Bhilwara and other projects on time, this may lead in double margin and uh, growth in revenue. Revenue growth can be multifold if the executive failed in next 5 years. But reminder, this company is totally a high risk, high reward play. Okay, any execution delay or dependency of China or customers concentration are serious risks that investor must